In early trade yesterday, the British pound came under pressure from weak data on UK GDP growth. Britain's economy shrank by 0.3% in the 3 months to December 2023, deeper than economists' estimates, pointing to a 0.1% decline. On the yearly basis, gross domestic product contracted by 0.2%. This means that the UK economy is on the brink of a recession, suggesting that the Bank of England will most likely ease monetary policy despite stubborn inflation. Today's report on UK retail sales will probably help the regulator take a firmer stand in this issue. Nevertheless, like the euro, the British pound recovered on Thursday, supported by downbeat data from the United States. US retail sales fell by 0.8% in January, down from a 0.4% gain in December. US industrial production slipped by 0.1% in January compared to economist estimates for a 0.2% increase. Judging by statistics, the US economy is in a weird spot. Although some numbers suggest that the economy remains robust, others indicate that it is faltering again. Obviously, the Federal Reserve's tight monetary policy is no longer good for the economy. However, given that the labor market is still strong, yesterday's report is unlikely to affect the plans of the US Central Bank. Therefore, it's too early to predict a bullish to bearish trend shift in the dollar. As I mentioned earlier, today's macroeconomic calendar includes data on UK retail sales, which are estimated to have risen by 1.5% month-on-month. Including outers, retail sales are expected to show a 1.7% gain in January after falling sharply in December. If the data is in line with forecast, the pound sterling will have a chance to extend yesterday's rally. Traders may also take notice of data on French GDP growth and German wholesale prices. The United States will report data on producer price for January, which are expected to rise by 0.1%. However, this indicator is unlikely to have a severe impact on market sentiment. The focus of market participants will be on US building permits and housing starts, which is likely to spark increased volatility. Furthermore, traders should pay attention to the University of Michigan's preliminary readings on consumer sentiment and inflation expectations. A bid statistic could support the greenback. Now let's consider the euro-dollar pair from a technical point of view on the 1-hour trading chart. A false breakout at 1.0756 will create a buy signal, driving the euro up to 1.0783 and probably 1.0805 as a part of the bullish correction that began on Thursday. At the level of 1.0805, I recommend going short on a rebound to catch an intraday correction of 15-20 pips. Short positions at 1.0783 can be considered only amid a false breakout. Going short would also be relevant if the price breaks through and fixes below 1.0756. In this case, the euro will dip to 1.0727 and 1.0698. At the mark of 1.0698, it would be wise to go long on rebound, counting on a rise of 25-30 pips. Long positions at 1.0727 and 1.0756 can be opened in the event of a false breakout. As for the British pound, the primary task of bulls is to protect the level of 1.2571. Strong data on UK retail sales will allow the currency to hold steady above this mark. In case of weak data, sterling likely to break below 1.2571. If the price tests this level from the bottom up, a sell signal will be generated. Thus, the British pound is expected to slide to 1.2535 and 1.2507. At the level of 1.2507, traders are recommended to go long on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.2571 and 1.2535 can be only considered amid a false breakout. In this case, one can expect a rally to 1.2608. A full breakout at this mark will generate a sell signal. If the price rises to 1.2652, it will be possible to go short on the rebound, hoping for a 30-35 pip correction. Good luck and have a nice weekend.